All right, I want to welcome everyone to our 22nd episode. I am George Evans. I'm the founder, president, and chief revenue officer at Convergence. I want to welcome you to our In Conversation with Convergence podcast. I am joined today by Peter Rosenstein, who is a principal at Gen 2. Gen 2, a longstanding client of Convergence. Peter, welcome. Good to see you, and thanks for joining us today. So, Peter, tell us a little bit about yourself and a little bit about Gen 2 for our audience.
Sure. So, as you said, Peter Rosenstein, I'm a principal with Gen 2, generally responsible for our external-facing technology solutions. So I am an accountant by training, but have moved away from the regular debits and credits and really get to concentrate on ways to make our clients' lives easier through technology. It's really a nice expansion of Gen 2's offering. Gen 2 being, one of the largest private equity administrators in the country. We are, in addition to our great service that we're able to provide on your typical admin side, we are also able to provide that technology solutioning that our clients are looking for.
Yeah, well, listen, it's been impressive to watch Gen 2 over the years. And, as I said, we go way back with the leadership team, at Gen 2. So, here's where I'd like to kind of start, Peter. One of the things we're obviously seeing in the market is, the increased demand for data transparency, portfolio information, and really, limited partners looking to access the same type of information that they get when they invest in the public markets. So I know that's near and dear to your heart and something that you work on. But I'd like to for you to first chat a little bit about that journey you're on, and kind of maybe even start with when you take a bespoke asset class like private equity. Where it's structured, it's intended to create alpha, and you contrast that to the public markets. What are some of the things you're seeing in terms of, the differences in terms of what you've had to deliver to the marketplace?
So really, from a technology solution, we've seen that, private equity has really been lagging as compared to what we've seen on the hedge space and mutual fund space, and really everywhere in the public markets. Historically, from technology companies, it's looked at as private equity is easy because hedge funds are worried about this high volume trading, very complex investments, the different types of derivatives that they're putting together. So that's where the solutions have really come out. On the private equity side, though, the structures, the investor allocations, the differences from investor to investor, it's now kind of a burgeoning market. It's really looking to build. It's growing. And the private equity group is looking at ways to improve their efficiency, scalability, and LPs are now pushing pretty hard to get access to a lot of that data as well.
Yeah. Do you see differences between, kind of typical PE LBO and PE credit, for example, or is it kind of the same challenge?
It's similar challenges. So, if you look at credit, obviously there are components of, how are you calculating interest and discounts and all of that, and trying to get out of Excel on that side. LBO or fund to fund or infrastructure, they each have kind of their own intricacies, their own complexities, but that doesn't mean that we can't look at solutions that can really encompass all of that.
Yeah, and I think it's an interesting time because some of the major PE administrators, right, who have typically been kind of traditional PE, are just kind of seeing some of that explosive growth in the PE credit markets, right? So when you also think about that market, I think one of the challenges, Peter, has been, the mutual fund market outsourced a long time ago to fund administrators. This followed by the hedge markets, right? And now closed ends kind of starting to follow, right? PE, VC, real estate, right? How do you guys think about technology that's impactful for sponsors? Meaning, how do you think about buy? How do you think about build? How do you think about best practice? How do you make those decisions around, really what to put in front of your clients?
So it's twofold. We're obviously looking at technology that's going to improve our efficiency and allow us to scale. And then we also look to technology solutions for our clients themselves, because we're handling all of kind of that back office work and the deliverables, but our clients also need solutions. So in a lot of cases, if there is something readily available in the market, we're going to look to buy and integrate. Yeah. Because if someone's already created this great platform, then why do we need to recreate it? However, particularly in this space, the solutions aren't there at this point. Or they may be partially there. They may be concentrating on one specific area, but not looking at kind of the industry as a whole and really what the sponsors need. So that's the areas that we'll look into building, particularly if it's something that's client facing.
And given, when I think back, you guys did a few very strategic transactions in the last year or two. How's that impacted what you just talked about, buying and building? Like there's capital, there's there's maybe a vision that might be different. Can you talk a little bit about how you've been empowered by some of these strategic transactions to kind of run with that agenda?
Yeah, so no, it's been great. It's been kind of fun time in that we definitely have a lot more capital coming into the business to take on these strategic investments, and it allows us the flexibility to really build out the overall solution that's going to be best for our clients. Yeah. So whether that is through partnerships with with existing firms, with existing technology solutions, if it is acquisitions. So with our acquisition of Update Capital earlier this year, which allows us to really bring out our own investor portal and service a part of the market we kind of stayed away from in the past, or it's through our true from scratch proprietary development like our sensor tool. It's been great, and we really have some exciting things to do going forward as well.
And that it's and I'm well aware of some of those products. Talk about differentiation, though, right? Because that's kind of the rub, I think, a little bit, especially when you buy and integrate, right? Because it's a incredibly competitive market, right? There are, believe it or not, 620 fund administrators in the world, and however, I think it's clearly the 80-20 rule in terms of assets and funds and market share. But how do you guys think about differentiation in terms of external product? Is it more building to just the client spec, right? What do they want? Or how do you think about, I need to also have a better mousetrap than, some of the firms that we compete with?
So it's a few things. Number one, I think we really have the benefit of having really good relationships with our clients. So we have essentially built-in subject matter experts. I say to our clients all the time, we think we know what you want. You know what you want and need.
Right.
So rather than us just going out and building and say, here's what you need, we really like to partner with our clients to go through the entire process. So we'll go through an interview process to say, here's our general ideas, what's important to you. And then we'll do that before we even start building. And then once we do put together a product, we're going to include them in that process throughout to say, did we hit the target? Did we hit the target? And that's not just taking one or two. We're going to reach out to the full scale of our contacts. In addition, the way that we look at technology solutions, we think is very different, particularly as compared to your pure play technology companies, in that we're a service company in our hearts. That it's really where we start. That is our business. So even when we're layering technology into those offerings, it's still from the viewpoint of how can we make our clients' lives easier. So everything that we do comes with the perspective of we're going to make it a fully managed service. We want our clients to just be consumers of data and not have to worry about managing a tool. So with our sensor product, for example, rather than the clients having to...
Not to interrupt you. What's your sensor product, just for our audience?
Sure. Sorry. So Sensor is our proprietary performance and attribution analysis tool. So it allows you to really slice and dice all of your data, whether it's investment, investor, or fund information, however you want to do it, to see your performance values. You can see in addition to things like industry and region, your typical ways you may look, you can dig down to how are the different team leads on your different investments doing, or group your investors how you want to. So with a tool like that, which is really powerful in that it exposes data and unlocks data that our clients have not really had access to in the past unless they're doing it just in Excel, but we're now providing that to them in a fully managed platform. So they don't have to get the data from somewhere, manipulate it, load it up, reconciling it, hoping it matches what they did in the beginning.
Right. Let them worry about content, right?
Exactly. It's linked to the same data that produced the financials and the PCAPs and ILPA and all of that. And now they can just use it, and they can determine what they're going to do with that. But it's now available.
Okay. Yeah. No. That's terrific. And let me ask you this. We're looking at the calendar, right? We're 2 weeks away from the end of the year. What do you think the two-part question, Peter? What was kind of the biggest technology challenge you had in 22? And what was the biggest technology accomplishment the firm had in 22 for our audience?
I'd say challenge was probably similar to what a lot of other people felt, which was just human capital. The employment market it's something I haven't seen before. It's people.
Well, it's funny you say that, right? We've never lived this, right? Our generation, right? Exactly. Right? It's pretty different, right?
But people just removing themselves from the market entirely and deciding they want to go off and do something different. So I think that's probably been the biggest challenge. Thankfully, in terms of my team, we haven't really seen the turnover component of it, but finding people to continue our growth is that's something that we're fighting with everyone else out there. People who insist on being remote 100% of the time, which we've figured out how to do, but you get big benefits of also having FaceTime and doing design sessions.
I think there's a hybrid going forward that kind of works, right?
Absolutely.
Everybody's got to figure that out still, right? So
And
human
we kind of
capital,
have that settled.
capacity, big challenge. How about your biggest accomplishment?
I think it's really been, pushing these products forward, pushing them out. We continuing the development of our products even through all of that. So we really haven't skipped a beat. We've added some great features to Sensor with the acquisition of Update, and Update Capital was historically a real estate focused investor portal, but with the work the team there has done in terms of making it more general PE and supporting all the different asset classes that fall under PE. We really haven't skipped a beat from that perspective, and it's been great.
Yeah. How about the markets itself, Peter? How does that impact you, or does it? I mean, or do you just really have an agenda that you move forward with? Because it's obviously there's been some real headwinds this year, right? And that could continue into a good part of 23. How does that impact your agenda? I'm interested.
So I think going into 23, I think the markets, the economic uncertainty, obviously is will pose somewhat of a challenge in that um, people are not necessarily jumping at the chance to necessarily spend more money. They may see strong benefits, but they want to wait. They want to wait to see where is the economy going to go? How's inflation going? What are salaries going to look like? So I think we're seeing the kind of the sales timeline dragging out a little bit more.
Yeah.
Just as people are looking to kind of figure out, where are we? Where are we going?
Yeah, I mean, listen, I think think about that, right, from a number of perspectives, right? Service providers with asset-based fees, right? That's a challenge, right? Right now, or even advisors, registered investment advisors whose assets might be flat or declining, and yet their expense line is the same or growing, right? And you start to get kind of that that P&L compression, and it creates a difficult environment. Now, I mean, the good news is we continue to see, especially on the closed-end front, lots of dry powder, right? Lots of capital still coming in the market,
Yep.
lots of new fund launches, and I'll throw a question at you that I think be interested in your reaction to this. One of the things we're seeing at Convergence, because we look at administrators, for example, and primes and custodians and audit firms and kind of their market share, and we look at what new business they're winning and losing, and because we can see it all, because we see what the advisor files, right? And we can see the trends in the market, right? And one of the things that's, with a few exceptions, that's kind of interesting in fund administration over the last year has been, we're actually seeing people, even though we talked at the beginning, it's the 80-20 rule where, the top 25 administrators probably, carry 80 or plus percent of the assets in funds. But all the new business in the last year is starting to go down market. And it's starting to go to 25 plus, a lot, not all, a lot, right? And one of the things we hear, and I'd be interested in your reaction to that, is, people are tired of paying kind of A team prices and getting the B team, right? And they're not getting the touch and the service experience that they would expect at the high end anymore. And we're seeing that right across administrators, audit firms, custodians, et cetera. Just, I know you're not the customer service guy, but just interested at, what your quick view on that kind of might be.
It's something that we see in any market. People want to get what they're paying for, and I think this is the opportunity for the best firms to really step up and show the service that they can provide. I mean, Gentoo's been a service first organization really from day one. We're tech enabled. We're providing technology. It's what most of this call has been about. But ultimately, Gentoo's all about service. So we're going to keep doing what we're doing well, and we're confident that our clients are happy. And if some people are going to go down to those lower levels, I think they're going to see the difference in that service that that they're getting down there.
Yeah, and you guys have done a nice job in terms of branding, I think, the firm and the reputation in the market you have for the type of assets that you service, right? You've kind of not been kind of everything to everybody, right? You've kind of tried to specialize in a few areas and do it well, So listen, we're kind of turning the corner here towards the end of the conversation. I want to look forward to 2023 and wanted to hear a little bit about, if you had to give me kind of your top 2 or 3 objectives for 23 from a technology, perspective, what are they, Peter?
So I can't give up too much of our secret sauce in terms of what's coming out. But we do have some really exciting, new features on existing technology, as well as, some potential new solutions that are coming out. One of the areas that we are really going to concentrate on is, integrating our new Update Capital investor portal into our overall, solution and offering. So, we really spent a lot of this year. As I mentioned before, bringing it from that, top line real estate portal to now, kind of that next generation private equity portal. And, we're really excited to, launch that out to the market and have it fully integrated with our overall solution.
Yeah. So listen, that is that investor experience, is I think the name of the game. And I think, that to our listeners, I think will be really, really interesting. Last thing, Peter, so our audience gets to know you, right? And I always throw some unexpected questions at the end and see what you do with them, right? Tell our listeners, what do you do for fun? Like, when you're not working at Gen 2, what are you spending your time doing?
Spend a lot of time with my kids. So I have 3 boys. They are a little bit crazy, but all in a good way, as only boys can be. So coaching sports teams, and just spending time with family is really
how old are your boys?
When I'm not away.
How old are your boys?
15. Yep, they're 15, 11, and 9.
All right, so you got some work to do. It's called the 529. Right, and right?
Oh yes, it's coming up soon, sooner and sooner.
Hey, I want to thank you very much for joining us today, and it was good to meet you and hear about your agenda. And listen, you've been a great guest, and you Gen 2's been a terrific partner and client with Convergence. So thank you, and I wish you the best for the holidays, and it's a good time with the family. So thanks.
Perfect. You too, and thank you very much for having me.
Yeah, you're welcome. Okay, again, I want to thank Peter, and I'd like to just finish today's podcast with my usual discussion around our league tables and some of the market share shifts we see in distribution of assets that we see in the market. So when you look at November 21 to November 2022, and we first look at administrators, we really saw asset growth year over year down about 6%. And I think what's interesting is that we saw administrators 1 through 5 down about 5%. So they kind of kept pace with that market. But administrators 6 to 10 grew at over 10%. And that's very interesting when assets were down 6%, and then administrators 11 to 25 grew at about 4%. So really, you really saw administrators 6 to 25 do much better than the market. On the audit front, interestingly enough, kind of the same point, but even kind of much greater scale. The market down about 6% for auditors in terms of asset levels, and the big four down about 4%. So pretty even with the market. But auditors 5 to 10 grew at almost 20% in terms of assets, and auditors 11 to 25 grew at over 11%. So that is that continues to tell the story of people pushing business down market. I want to talk about custodians thirdly now. So custodians 1 to 10 down about 3% in terms of assets, but custodians 11 to 25 up about 4.5%. And then lastly, when we look at prime brokers, and my view on primes is more funds than assets, is we saw the fund growth in the prime brokerage market at almost 11%, and we saw that distribution be 1 to 10. Primes 1 to 10 almost 4%, and primes 11 to 25 almost 8%, and then the rest of the prime market 25 plus, and give or take there's around 275 primes in the market, at about close to 11%. So for all four types of service providers, really we're seeing kind of some of the realities of the market share the top 4 or 5 have, right? But we are seeing down market distribution, which continues to be an interesting phenomenon. So listen, I want to thank you for joining me for episode 22 of In Conversation with Convergence. I hope everyone has a Merry Christmas and a happy holiday, and we will be back in January with another great set of guests. So thank you all, and have a good day.